What's happening, everybody? It's your boys, Steve Straza, Sean McLaughlin. This is the Flow Show. How you doing? Right when we went live, my mouse just fell off my desk and made this huge kerplunk. So if you heard that, I apologize. Straza, how you doing, buddy?
I'm doing great. Today is one of those frustrating days in the market, though, where I almost feel like, why do we even try being good at this, right? Because things like today happen. And if you're a trader and you have short-term trades on, big candlesticks like the ones we have today are no good.
But you know what? How many times have we seen this, right? The end of the month, the end of the quarter, the end of the trading day yesterday, we get a big ramp in one direction. And then the first minutes and first hour on the first day of the month following that, they give it all back. I mean, we've seen this playbook before.
Yeah,
Did
no,
this change
absolutely,
anything in the
Sean.
market? I don't think so.
This is another one of those big VIX days. The VIX has been elevated all day. It's up 21.5% here. This will be the third biggest VIX spike or second biggest VIX spike since your yen yo-yo. So not nothing. It seems like every time we make, a decent amount of progress in tech or growth or even speculative growth recently, they give it all back. So we'll see.
I'm not as pessimistic as you are on this.
I'm not pessimistic. I'm not pessimistic. It's just, again, here come the Bears.
Yeah. We'll see how the rest of this week plays out. If we don't earn back what we've lost this morning by the end of the week, then there might be something to it. But right now, I'm not freaking out. I'm holding steady. But hey, VIX up 21% certainly is notable on the day.
Yeah,
that is certainly notable.
It's hard to freak out when China is doing what they're doing. Helicopter money is never a bad thing for the market.
So let's talk about China a little bit. I'm on board with this. I mean, not by any grand design, but I've noticed that I have a lot of China positions on, which is something unusual for me. I shouldn't say China specific, more Asia. Yeah. I have a bunch of Asian stocks that have Asia exposure, a lot more than I usually do. And that makes sense, right? Because that's where a lot of the best setups are happening right now. And I was talking with some people at my trader meetup last night here in Boulder. It feels like there's a sentiment shift taking place when it comes to all things Asia related, certainly China, right? I mean, I think it's pretty generally accepted view amongst at least Americans and certainly in the West that China's a tricky place to be an investor, right? I mean, it's a communist government. Can we trust any of the numbers that are coming out of there? Nobody wants to trust it. So it's going to take, the sentiment to all of a sudden people feeling confident to invest in China, for instance, that's not going to change overnight, right? That's going to take place over months and maybe quarters and maybe even a couple of years to get people coming around to the idea of investing in China again. So we could be just getting started here. Yes, we've had a big rally certainly in the last couple of weeks, but this could just be the beginning.
Yeah, it depends on your time frame, right? We got some monster momentum thrusts here, very short term momentum thrusts. Typically after something like that, you want to give it time to cool off, dance a little bit, little backing and filling. But over intermediate term and definitely longer term time frames, this is typically an initiation reading, price action like this much upside momentum. It was like bang every other day last week. And then again, Monday, just yesterday, up 5, 6, 7, 8, 9, 10%. That's a lot. And that's typically how good things begin.
Yeah.
So I think,
I was, again, last night having this discussion with people and getting exposure in China as an options trader. I feel like we have a little bit of an advantage because at least with an options trade, if done right, we could put positions on that clearly define our risks, right? Yeah. I still, even in this tape, and even if there's a turn coming, I would feel pretty uncomfortable buying common stocks in China. Yeah. But if I could participate with options or option spreads that have defined risk, I feel a lot better about that, right? Because then it's just like any other trade.
So, Sean, let's all look at my chart. I'm putting 200-day simple and exponential moving averages on it just to show how sideways this trend is. But if you zoom out on a chart, this is China Internet, K-Web. This is a big one. If you zoom out on any of these China charts right now, this is a 1, 2, 2.5 year base. It's a monster base going on 3-year bases out there. Mm-hmm. This is the same pattern, Sean, that we've been buying this whole cycle. It just took China longer. It takes some stocks longer than others. Isn't this like a leaps setup? Like we're talking right now, China over the next couple days, couple weeks. First of all, markets are closed in China. It's like Golden Week or something. So K-Web's going to trade out here today, but like what's it trading on? Who the hell really knows? Because Chinese markets are closed for like, I don't know if it's like a week. They're closed for way too long. They do what they want. It's absolutely crazy town over there. But the bigger point is over longer time frames, this is the pattern. So like when you look at something like this, aren't you thinking to yourself, oh God, leaps? We got to do the leaps.
I mean, no, and I'll tell you why, because I'm
Why?
looking at the implied volatility chart at KWeb and it's through the roof right now. So you're paying high options premiums to buy out of the money calls, especially longer dated ones. So
Look how volatility is really spiked with this rally.
yeah, yeah. And usually, and this is an interesting case, right? Usually we see volatility spikes when stocks are selling off, right? Because that's when
Yeah.
people get scared. But maybe this is another very interesting data point, Straza, that we're seeing volatility spike in a rally, and that tells me that people are getting aggressively bullish here, right? They're taking bets. They're willing to pay up, pay high options prices for the
Yeah.
upside. That's what it seems like
Well,
to me.
well, when these stocks go, I mean, they move like no other group of stocks. It's bananas. Back in March of 2022, you could see it on this chart here. K-Web was up 40% in a single day. So that's China for you. So it's like, how do you price that in the options market? It's really a tough one. What if you check some of the individual names? Like I always think to play a theme, go with the blue chips, right? Go with the big boys. So like what would a Tencent or a Baba look like from an implied vol standpoint?
Well, Tencent is more
Tencent loser.
affordably priced. Thankfully for me, I'm already in Tencent.
Yeah.
I got into it a couple weeks ago, so before the volatility has been rising. If I were to play Tencent here, if I were putting on a fresh trade here,
Mhm.
I would probably look at some kind of spread, maybe a calendar spread to take the sting out of the price of the long options that I'd be buying. Um, maybe selling
Um,
I don't know, looking at your chart there, selling like the 16 strike calls because that's right above that resistance from earlier this summer.
Sean,
Um, in fact, I think that is how I played it.
and
Let
Gene,
me, let
just
me,
throw my chart up for a second though. Like I think this is just so important. This is why we do what we do. Polarity is so real. Like what a textbook retest this was. Stock was down 40%. If not for technical analysis and polarity and the law of former resistance turning into support, how would you know to buy this at $9, $10 on this retest? You had no other way to get in. You're catching a falling knife.
yeah,
If you zoomed out on the chart, now in hindsight, listen, I didn't do it. But in hindsight, it's like, well, of course, look at this bounce. And this is one of the leaders still out there, Sean.
yeah.
Try Baba real quick, and then I got a spicy one. We'll pivot to, I guess
I
you.
mean, Baba, same story, right? I mean, big spike both in the share
Yeah.
price and also in the volatility. I mean, it's at the highest levels it's been all year,
What the
volatility.
hell happened back in June? What was that about?
I think that's just a bad print. I mean, there was a dividend that was paid on that day, which might have monkeyed with some stuff. Probably
Yeah.
just a bad data.
Okay, so I already kind of gave you a clue of what I wanted to talk about today. Can we agree that China, we probably have time? These are primary trend reversals. We'll talk about China more in the coming weeks and months, I would imagine, eventually get something on there. From an implied vol standpoint, doesn't seem like the best time. Also, just from a short-term momentum standpoint, you could probably wait on this.
Yeah, yep. What else you got?
So this is Zim integrated shipping. Uh, Listen, it came up because we just wrote about it and published a post about it yesterday. But also, have you heard about the shippers? Have you heard all of the news up until, well, now it's the ballistic missiles, but before the ballistic missiles, it was the shippers. There's a strike. Strike with the shippers.
Okay.
So, are you a buyer or a seller? Should we fade this headline? Because I think we really could. If you look at this chart, what a setup. I mean, this is textbook. In a market environment where everybody's talking about the scary head and shoulders patterns, how about this inverse head and shoulders? Ooh, baby.
Ooh, the old inverse head and shoulders. You don't talk about
Yeah.
that too often.
Textbook. So primary trend is turning higher, right? We have a base right up here on a bigger base down here, primary trend base. intermediate term trend base. VWAP from the prior cycle highs from March of 2022, right here at the breakout level. What if we want to make the bet that, oh, by the way, if it's not already good enough, how about this? So we just did a post. This is the short interest charted in the lower pane here. Hopefully this worked, Gene.
I see it.
17% short interest on. It was 30% earlier this year. 3 days to cover. How about we bet on a little short squeeze here from Zim?
I like it. I like it for, I mean, just as a standalone, I like the potential of this inverted head and shoulders. I don't love the VWAP coming down, but that's okay. We could leverage that to our advantage here in a sec. And I like,
we're still below VWAP. Good point.
Yeah. I like that there's that the story out there. I mean, I'm not going to pretend to know anything about the news, but if it's in the news and if people are scared by it, well, and a lot of people are short, I feel like that could work against the short sellers, and we could get a little squeeze action here. Here's what I'm thinking. And I'm looking at like a 1 year. I'm looking at your chart there. The VWAP is what is causing me to do what I want to do here, Straza. I want to, let's first say that, let me, I
mean, Sean, if this doesn't work and this isn't a sweet breakout, which it looks to be, it's probably a nasty failed breakout.
Right. And so here's what I'm thinking. Here's what I'm thinking. I want to go out to April options, give myself some time. I want to be an owner of the 30 strike calls. Those currently have about a 35 delta. The 25 delta are at 33. That just seems a little further away than I want to be. Plus, there's no bid in those options currently.
And 30 happens fast in a name like this. This thing rallied 50% off the lows earlier this month.
So I think I would like to be an owner of the 30 calls, but I don't want to pay what would look like I'd have to pay about 2.25 to buy those right now, 225. I don't want to pay that with Zim being under the VWAP here. That makes me a little bit nervous and makes me think that this could take some time. So to compensate for that risk, I want to sell a call against it. I want to do another calendar spread. I've been doing a lot of calendar spreads lately, Straz. I don't know if you've noticed. But the same $30 strike in November options, we could sell that for probably about $1, which almost cuts our cost of those March calls in half. And as long as it doesn't get to 30 by November 15th, which is not that far away, then we own those March calls for, a little bit more than half of today's price. I like that.
So,
and worst case or not worst case, but in the unlikely scenario where this thing trades to 30 in the next week or two, then we just take the whole spread off. It'll be a profitable trade. It won't be the profit we're looking for, but that's a first class problem, right? Trade is not doing what we want it to do, yet we're still making money.
So we're making the bet that we eventually get the breakout. This works best if we eventually get the breakout. We just don't get the breakout in the next couple of weeks here.
Exactly. We're getting paid to wait.
Yeah.
And if the VWAP proves to be far more challenging than we think, and it reverses hard back to the lower level of that range, well, those short calls are zeros. We could sell the long call that we're long in April for, maybe $1.
Yeah.
It's not gonna be that big of a loser for us because our net cost on this trade at current prices right now, I could probably get into it for about $1.25 net.
Yeah.
And if I could sell those April calls for $1 that right now are trading for $2.25, if I could sell those for $1 in a sell-off, I mean, I didn't lose much. Big deal.
Some decent volume in those Novembers today too.
Yeah, there's decent volume all around. We have, this stock does trade weekly options. That's usually a pretty telltale sign that there's plenty of interest here. So don't be swayed by, there might not be a whole lot of open interest in some of these strikes, and there might not be a whole lot of daily volume, but the bid-ask spreads are, tight enough. And I'm completely comfortable putting a trade on in this name for sure.
So it's also
I was just going to finish my thoughts. So
yeah,
I like a November and April 30 call spread. So that's selling the November 30s, buying the April 30s, paying about $1.25 for it, give or take. I'm just doing the math in my head, and obviously prices are moving, but around $1.25, $1.35. That seems like a great trade.
And
Limited risk, which is the
is
key.
there anything that could happen where you take one leg off, like maybe take the short leg off and leave the longs, or no, you're gonna close them together, however you do it?
Um, that's a good question. So let's do a hypothetical here. Let's say that ZIM trades up to, hits our strike at $30. It hits it
Mhm.
on November 7th, 1 week until expiration,
Yeah,
right? Well, I don't know what the price of those November 30 calls are going to be, but it's possible that they might only be 25 cents or 30
right.
cents.
Intrinsic value. Yeah,
And would I be, if I close those calls for 30 cents, yeah, that adds to my net exposure in the trade, but it doesn't add a whole lot. And obviously it
right.
would have to be an at the moment decision, right? Like, am I still bullish on this name? Do I feel like this is
Right.
ripe for a big run? Is the short squeeze on? If so, yeah, I might just want to buy those calls or cover those November calls and let the rest ride.
Right.
So I can't tell you exactly what I'll do, Straz. I'll have to make the decision when it happens, but most often, most of the time, my general rule of thumb is if it trades to my short strikes while I still, or trades to my strikes while I still have the short option on, I just close the entire spread, book the profit. It's a profit nonetheless. Not the profit I wanted, but still a profit, and that's good.
I think it's a good point to make, though, that we really oftentimes don't know, right? The way targets get hit, how they're hit, what the broader market's doing when they're hit, what the rest of my portfolio looks like when those targets are hit. These things matter. I wish it was black and white all the time,
Yeah.
but
Hey, we need to address a couple people in the chat. First, shout
yeah,
out Ken Kyle. He's in my chat room, the All Star Options chat room. He did mention this ticker last night. I saw him talking about it. So he's one step ahead of us. Ken, you're doing something right, buddy. Keep it up. Secondly, what is that? Projected enable. I think that's what that handle is. He asked a good question about Baba. Just going back to that Baba for a second. We were talking about how I didn't want to put a leaps trade on because I didn't want to buy calls because the premium is high. He suggested, well, maybe that's a good opportunity to do a covered call type trade where you buy a stock and
yep,
sell calls against it.
yeah, it's
You
just
know
kind of
what? That's not a bad idea. It's not something I do. I don't like to buy stock. It's not very margin friendly for me. I like to be very efficient with my margin. That's why I like options. But if that's a perfectly reasonable trade to put on, to buy the common at whatever it's trading at right now, sell out of the money calls that have rich premium. That's a perfectly acceptable trade. The only thing is you have to be wary of is that you still have basically, undefined risk, right? If the
yep,
stock gets cut in half overnight, I mean, is it going to happen in Baba? Probably not, but it could. We've seen things like this happen
yeah. But
before.
and Sean,
Um,
this is China, and this
this is
is like
China,
a news-driven rally, right? And they're closed for a week here from trading, so it's an environment where it's like I don't know how they're going to open up, and you might want to be careful with it.
right? So your head's in the right place there, guy. A covered call would take advantage of the high options premiums and put that, working for you. Do I want to be owners of long stock? Probably not, but that's just me. But you could do we never talk about this, Straza, but you could, instead of buying 100 shares of stock, for instance, you could buy a deep in the money call that trades with nearly 1-to-1 with the stock, and at least
Yeah,
you have your risk defined somewhat,
less.
right?
Yeah,
So, for example, like if I'm, let me just look at the prices real quick.
I
So
like
I'm
that
having,
more.
yeah, I'm having trouble with my screen here, so I can't do it. But yeah, you could buy. Where's Baba trading at now? 110 ish. Like if
Yeah,
you bought, I don't know, a 95 call that's basically pretty much has a 100 delta, meaning it trades 1-to-1 with the stock.
yep,
That you're going to pay probably $15 for that call. What did I say? 95 strike?
yeah,
95 strike, you'll probably pay about $15.
yep,
That's the most you could lose. That might be a lot depending on your risk parameters, of course, but it's better than losing 100 or 50 if you think it's cut in half. So there are different ways you could play it. We like to say options give us options, but generally speaking, I'm not a covered call buyer. It's just not something I like to do. But yes, You are correct, sir. A covered call play could take advantage of the elevated options premiums right now in some of these China names. Okay. Did we do good? Did we do some good work here today, Straza?
I think we did. No, I think that's great advice about the Baba too. If I could just say, from a technical perspective, I think you could probably get a better entry. Momentum hasn't been this overbought in Alibaba since like 2017. Just had some of its biggest daily moves in the history of the stock. And if you look at the chart and you zoom out to the prior cycle highs, the base isn't even completed yet. The primary trend's not even higher, and we're at super, super, super extended levels, right? So I think, you could take your time here, be a little patient on
Yeah.
China.
All right, so just to recap, going back to the Zim, we like getting long Zim. We like it for the short squeeze. We like the potential here, but we are concerned about that overhead resistance. That could be resistance with that VWAP. So
Yeah.
we're going to play it with a calendar spread. We like selling the November 30 calls and buying the April 30 calls, paying about $1.25-ish, $1.35, somewhere in that neighborhood. I think that's a good trades to find risk. If we get to 30 before November expiration, we just take the trade off, book the win, and call it a day. I think
And
that's the trade, buddy.
and it makes sense because it allows for us to have a false start here on what looked to be a breakout yesterday, right? It's a messy market still. Volatility is elevated today. If this is a false start and it eventually goes in a couple weeks, even better for the strategy. So I love it.
Yeah, absolutely.
All righty.
All right, everybody. That's been the Flow Show. And by the way, you notice we're doing this on a Tuesday. Going
Nice.
forward, Steve and I have decided we love you guys so much
We
that
don't
we
want
don't
to.
want you to ever have to miss a show. And we found that we've been missing a lot of Monday shows because there's been holidays. They're
Not our
often
fault.
travel days for us. So we want to give the people what they want. And you guys want the Flow Show. So we're moving this to Tuesdays now. This way we can more likely to have an episode every week because I know a lot of people get a lot of value out of this and we appreciate that. So thank you. Straza, great job today, buddy.
No, this was fun. All right. Thanks, Sean.
All right, everybody. Thanks for tuning in. We'll catch you next week.